Ever wondered what different types of stock caps mean? Well, you're in the right place. Picture the stock market as a vast ocean filled with different types of fishes, each representing a company. The size of these fishes, or rather the companies, is determined by their market capitalization. This is where the concept of stock caps comes into play. Stock caps, or market caps, are a measure of a company's total market value. They are calculated by multiplying the company's outstanding shares by the current market price of one share. There are different categories of stock caps, namely large cap, mid cap, small cap, mega cap, and nano cap. Each category provides a unique risk and reward balance, and understanding them could be a key to making informed investment decisions. So, ready to explore this fascinating aquatic world of stock caps? Let's dive deeper to understand each one of them. First on the list, we have large cap stocks. In the vast ocean of stocks, these are the big fish, the whales if you will. Large cap stocks, short for large market capitalization, represent publicly traded companies with a market capitalization value of over $10 billion. For those new to the term, market capitalization, often referred to as market cap, is simply the total value of all a company's shares of stock. It's calculated by multiplying the company's share price by its total number of outstanding shares. Now you might be thinking, what's the big deal about these large cap stocks? Well, they're typically well-established companies that have been around the block. Think of behemoths like Apple, Microsoft, Amazon, and Google's parent company, Alphabet. These are all examples of large cap stocks. They've been in the game for a good while, have a proven track record, and are unlikely to disappear overnight. Large cap stocks are often traded on the world's largest exchanges, such as the New York Stock Exchange and the Nasdaq. They are the heavyweights of the stock market, companies that have stood the test of time and continue to play a significant role in our everyday lives. One thing to remember about these stocks is that they're generally considered safer investments. They're less likely to be affected by market volatility compared with their smaller counterparts. This stability tends to make them a favorite among conservative investors who prioritize preserving their capital over chasing high but risky returns. However, there's a catch. While these stocks are less risky, they also typically have lower growth potential. The chances of a company like Apple or Amazon doubling or tripling in size within a short period are relatively slim compared to smaller, more nimble companies. But remember, in the world of investing, there's no such thing as a free lunch. Higher potential returns always come with higher risk. Large cap stocks are considered safer investments, but with lower growth potential. So, if you're the type of investor who prefers a steady ship over a speedy but potentially rocky ride, large cap stocks might just be your cup of tea. Next up, mid-cap stocks. Let's dig into the world of mid-cap stocks. These are the stocks of companies that fall into the middle ground of the capitalization spectrum. So what is the capitalization range for these middle-of-the-road stocks? Typically, mid-cap stocks represent companies with a market capitalization between $2 billion and $10 billion. It's like Goldilocks and the Three Bears. If large cap stocks are too big and small cap stocks are too small, then mid cap stocks are just right. They offer a balance between the growth potential of small caps and the stability and resources of large caps. Now, let's stroll down Wall Street and see who we might find in this mid cap arena. We could bump into companies like Foot Locker, the global retail giant, or maybe Molson Coors Beverage Company, one of the largest brewers in the world. These are just a few examples of the diverse range of businesses that fall into the mid-cap category. So, where do we find these mid-cap stocks? Well, they're traded on all the major exchanges. You can find them on the New York Stock Exchange, the Nasdaq, and many other global exchanges. They're not as glamorous as the large cap stocks, and they don't have the same wild, untamed potential as small cap stocks, but they do offer a unique blend of growth potential and stability that can make them a valuable addition to your investment portfolio. Investing in mid-cap stocks can be a bit like walking a tightrope. You're balancing the risk of smaller, less established companies with the potential for higher growth. But with the right research and a dash of courage, mid-cap stocks can offer a rewarding investment journey. And that, my friends, is the essence of mid-cap stocks. They're not too big, they're not too small. They're just right for investors who are looking for a blend of risk and reward. Mid-cap stocks strike a balance between risk and growth. Moving on to small-cap stocks. Now, these are a fascinating bunch. They are like the hidden gems of the investment world, often overlooked yet brimming with potential. Small-cap stocks, in essence, represent companies with a market capitalization typically under $2 billion. That's right, billion with a B. To put it simply, market capitalization, or market cap, is the total market value of a company's outstanding shares of stock. A company's market cap gives us a clear idea of its size and stability, and it is calculated by multiplying the company's share price by the number of its outstanding shares. Small cap stocks are typically younger companies or those operating in niche sectors. They're like the startups of the stock market, if you will. And because they're smaller, they often have more room to grow compared to their larger counterparts. Examples of small cap stocks can vary widely, from upcoming tech companies to regional banks to innovative healthcare firms. Some popular small cap stocks you might recognize include Boston Beer Company, maker of the well-known Samuel Adams beer, or Chegg, a popular online education platform. These stocks are traded on all major exchanges, including the New York Stock Exchange and the Nasdaq. However, it's important to note that while smaller exchanges might have a larger proportion of small cap stocks, you can find them on any exchange. Now, investing in small cap stocks is not without its risks. Because these companies are smaller and often less established, they can be more vulnerable to economic downturns. They may also be more volatile, meaning their stock prices can fluctuate more drastically. However, the potential for high growth is a key attraction for many investors. Think about it, investing in a successful small cap stock early on could result in significant profits down the line. Remember though, as with any investment, it's important to do your homework and understand the risks involved. Small cap stocks offer high growth potential, but come with increased risk. Lastly, let's talk about mega and nano cap stocks. These are the two extremes of the market capitalization spectrum, and they present unique opportunities and risks for investors. Mega cap stocks are the giants of the stock market. These are companies with a market capitalization of over $200 billion. Yes, you heard it right, $200 billion. These are typically multinational corporations with established, dominant positions in their respective industries. A good example of a mega cap company is Apple, with its market cap often exceeding the $2 trillion mark. These stocks are usually traded on major exchanges like the New York Stock Exchange or the Nasdaq. Investing in mega cap stocks can provide stability and reliable returns. However, as these companies are already so large, their growth potential may not be as high as smaller companies. Now let's swing to the other end of the spectrum, the nano cap stocks. These are the smallest players in the market, with a market capitalization of under $50 million. Nano-cap companies are often young, up-and-coming businesses with significant growth potential. But they also carry a high level of risk due to their size and relative obscurity. A nano-cap company might be a tech startup traded on the OTC Markets Group, a less regulated exchange than the NYSE or Nasdaq. Investing in nano-cap stocks can be exciting, as these companies have the potential to become the next big thing. However, they also carry a high level of risk, as they are more susceptible to market volatility and may lack the financial stability of larger companies. So, whether you're drawn to the reliable giants of the mega-cap world or the potential up-and-comers in the nano-cap space, it's essential to do your research and understand the risks involved. Remember, every investment carries some level of risk, and it's important to diversify your portfolio to manage this risk effectively. Mega-cap stocks are the giants of the market, while nano-cap stocks are the smallest players. So, there you have it, a simple guide to understanding stock caps. We started with large cap stocks, the giants of the industry, typically valued at over $200 billion. These are the stalwarts of the market, offering stability but often slower growth. We then moved to mid-cap stocks, valued between $2 and $10 billion. These offer a balance between the growth potential of small caps and the stability of large caps. Small cap stocks, valued under $2 billion, are often young companies with high growth potential, but also higher risk. Finally, we touched on mega and nano cap stocks. Mega caps, the largest of the large, often exceeding $200 billion in value, and nano caps, the smallest of the small, typically valued under $50 million. Each has its own risks and rewards. Remember, understanding stock caps is just one piece of the puzzle in making informed investment decisions.